Have you thought about the risks of homeownership? It's a question that many of us ponder when considering stepping onto the property ladder. Homeownership, it's a noteworthy financial undertaking that holds a balance of advantages and drawbacks. It's much like a seesaw, tilting between the potential for a lucrative long-term investment and the responsibility of a significant financial commitment. But don't let the scale intimidate you. It's all about understanding the landscape. Before we venture into the risks, it's only fair to acknowledge the benefits attached to homeownership. Homeownership, it's like a journey that bears fruit over time. One of the major benefits is that real estate tends to appreciate. Yes, the value of your home more often than not will increase over time. And that's a good thing. This appreciation provides a good long-term investment opportunity, leading to potential profits when you choose to sell. Now let's talk about equity. Owning a home is like having a savings account that grows without you having to make regular deposits. Each mortgage payment you make, most upgrades you add to your home, contribute to building equity. This gradual process leads to financial flexibility. It's like having a financial safety net that you can tap into for future needs. And who doesn't love tax deductions? As a homeowner, you can enjoy the advantage of tax deductions on mortgage interest and property taxes. It's like the government is rewarding you for investing in a home. But, as with all good things, there are some caveats. Recent tax law changes have reduced some of these advantages. Plus, the cost of homeownership doesn't stop at the purchase price. There are other expenses to consider, which we'll talk about in the next scene. The price tag on a house is just the beginning of your financial commitment. Indeed, the journey through the terrain of homeownership is not just about the initial purchase price. There are a myriad of additional costs that you'll need to navigate. One of these is closing costs. This is the money you'll need to close the deal on your house purchase. It typically includes loan origination fees, appraisal fees, and attorney fees, among others. Then there's maintenance. A home is like a living, breathing entity. It needs to be taken care of, and that comes with a cost. You'll need to factor in everything from fixing a leaky faucet to the occasional roof repair. Don't forget about insurance. Homeowners insurance is a must-have. It protects your home against damages from things like fire, theft, and certain types of weather damage. If your home is in an area where floods happen often, you might need to buy flood insurance. If you have a loan on your home, your financial institution will probably make you get this insurance to protect your house and their money in case of a flood. And then there are property taxes. These taxes are based on the value of your property and are used to fund local services like schools, roads, and emergency services. The amount varies by location, but it's an ongoing cost you'll need to budget for. These costs can add up, making the financial commitment of owning a home much larger than the initial purchase price. Homeownership is not just about the financial gains, but also about the financial risks. As we journey through the world of homeownership, it's important to keep in mind that this is not an endeavor without its share of financial implications and potential pitfalls. Firstly, let's talk about the elephant in the room, the potential of a housing market crash. Real estate isn't always a surefire win. Remember the housing bubble of 2008? A lot of homeowners found themselves underwater with their homes worth less than their mortgages. It's a sobering reminder that the housing market can be unpredictable and sometimes unforgiving. Next, there's the risk of foreclosure. If you're unable to keep up with your mortgage payments, you could lose your home. It's a grim reality, but one that's necessary to acknowledge. Financial circumstances can change rapidly, and it's crucial to have a solid plan in place to handle such situations. Then, there are unexpected maintenance costs. When you own a home, you're the landlord. If the roof leaks or the furnace breaks down, there's no one to call but yourself. And these repairs can be costly. It's a good idea to have a financial cushion to handle these unexpected expenses. Lastly, let's not overlook the risks involved with selling the home. While selling a primary residence can allow for tax-free profits up to $250,000 for single homeowners and $500,000 for married couples, it's not always smooth sailing. The real estate market can be fickle, and there's no guarantee that your home will sell when you want it to, or for the price you want. The road to home ownership is paved with both rewards and risks. It's a journey that requires careful planning, financial discipline, and a willingness to navigate the potential challenges that lie ahead. It's essential to carefully consider these financial implications and risks before committing to buying a home. And there you have it, a list of risks and rewards of home ownership. Take the time to understand the risks and rewards associated with home ownership. Consider your financial situation, your long-term plans, and your comfort with the inherent uncertainties of the real estate market. Remember, the decision to purchase a home may be the biggest decision you ever make. If you found this video helpful, please hit the like button and subscribe to our channel for more informative content like this.